Capital Markets Emerging Growth Virtual Equity Conference. I am Joe Gomes, Managing Director and Senior Analyst at Noble Capital. Today, I have the pleasure of introducing Resources Connection. Following the presentation, we will have some time for Q&A. RGP is a leading professional services company building a future where enterprises produce their best work without constraints. The company develops meaningful solutions to complex business challenges through its comprehensive brand portfolio. With us today from the company is Kate Duchesne, President and CEO, Bradesh Patel, COO, and Jen Rue, CFO. Kate, the floor is yours.
Thank you, Joe, and thank you, Noble. We're happy to be here and participate in this virtual conference. Welcome to learning about RGP. So, Jen, I think you're running the slides. Yep, let's dive in. We're going to tag team this so you can hear from all three of us. I'll start with just an overall overview of RGP and who we are today. We partner with businesses to help them drive their transformation agenda, primarily in two ways. We serve the office of the CFO, and we deliver services across three engagement models. One is on-demand or professional staffing, the other is consulting, and the third is outsourced services. We are a global business. You can see the statistics on the right of this screen. We're really proud of the client base we serve and the longevity we've had with our client base, serving transformation needs around the world. RGP spun out of Deloitte about 30 years ago, and the founding premise was that CFOs had a lot of operational projects underway and shouldn't be turning to their accounting firm or audit firm for that work. And so we built a business by creating a business model that bridged supply and demand. In the early days, our talent demographic was largely women who had fallen out of the Big Four and wanted to work with more flexibility. We're proud of the accolades we receive as one of the world's best management consulting firms, best companies to work for, and best mid-size employers. Let's go to the next slide. So our investment highlights for RGP is that we are building a more diversified, integrated, and complete business. We're also building more resilience in our business by having a diversified model. What we find in today's client base is that the models of yesterday, which are largely built on a pyramid model with layers of junior talent, or well-defined playbook work, is not what clients need today. The environment is so disrupted and so fast moving that clients are really looking for high quality partners that provide more flexibility and adaptability. We have very strong client retention, and have worked with these clients. As I like to say, we may not know year to year what kind of projects we're working on, but we know we'll be engaged to support them. We're continuing in today's environment to leverage AI for digital transformation and global execution. That's both in how we do our work internally, but also how we're delivering our services with clients. We're proud most recently of our ability to expand our margin, as we reported yesterday. And also we're working very actively on increasing our pricing as we've moved more into consulting and high value work, and going after bigger deals and bigger, longer term engagements. Jen will cover our balance sheet at the end and our return capital allocation strategy. Let's go to the next slide. So this slide I really love because it positions us in light of the competitive marketplace. I often hear from or get the question from investors, who do you compete with? And given that we're a diversified platform, we compete with some of the staffing providers, professional staffing providers, but we also compete every day with traditional consulting or the Big Four. And that's true given that we've moved more into consulting projects. But what sets us apart is really that combination of high flexibility and high impact. So our talent pool is generally very seasoned consultants who generally bring 10 to 20 plus years of experience and have worked both in professional services or consulting firms and have also worked inside business. So have often held the seat of the client that we're now serving and really understand how to get work done inside a business. And so that makes our consultants very credible to client teams. And we work very seamlessly with our client teams. And that's a real differentiator. And we're also built to scale globally. We have a global footprint. Our three main areas of operation are North America, Europe, and Asia Pacific. We have global delivery centers that we've built over the last several years in India and the Philippines. So we can deliver global talent and build blended teams for our clients that have global transformation projects. So with that, I'm going to hand it over to Bhadresh to really go into our solutions and the talent a little bit more.
Thanks, Kate. Our solutions are highly focused, as Kate alluded to, in the agenda of the CFO and digital transformation, which is where most companies are spending a lot of money, especially where they're trying to create more cost efficiencies in their business and process automation. And our primary target is the CFO, and in today's world, the CFO has a lot of authority and power over these types of decisions. And as such, our capabilities expand to adjacent personas as well, such as the CHRO, the COO, CIO, and CTO. Our capabilities, stem in the focus areas of enterprise strategy and operations and performance, where we're really looking at organizations and helping them think through how they optimize their organization or reorganize their functions. Digital data and technology, key driver for a lot of the modernizations, finance and accounting, and governance and risk compliance. We also are enabling these solutions by technologies of SAP, Oracle, Workday, ServiceNow, and BlackLine, which become key drivers in the market right now around either upgrades or entity consolidations in the ERP space, workflow modernization and process optimization with both ServiceNow and BlackLine. And we have cross-industry experience and expertise around financial services, healthcare, technology, and retail and CPG. If you can go to the next slide. And as Kate also mentioned, we are very fortunate to have amazing clients for a long tenure. We're pretty diversified in our portfolio and very well intended in the segments we go after. We work with a lot of Fortune 100s. Our capabilities are relevant typically when we're doing line of business transformations. And as we kind of go into the Fortune 500, Fortune 1000 large market companies where we can do enterprise transformations as well as line of business transformations across CFO advisory and digital transformation. And then our startups and scale-ups and spin-outs is our Countsy outsourced services business, which is also focused on finance and accounting, full outsourcing, both people, process, and technology. As such, we cover a wide area of clients in different segments, but we have purpose-built solutions really targeted for those segments that can be consumed by our clients. Next slide. And what differentiates us, our model is different than the typical pyramid scheme you see. We have the ability to bring very seasoned, experienced people, not only those that have been from the Big Four consulting, but also have functional expertise and occasionally have also sat in the seat of our clients so they can really hit the road running. 51% of our people come from Big Four experience. We're also very proud that 69% of our organization is very diverse across the board. We win tons of awards across the board for the work that we do, for the innovation we bring for our clients. And, our average tenure of our consultant pool is at least 5 years, if not longer. And I think the edge we have for our people is the optionality we give them, right, in types of transformations and projects they want to work on. We have both bench consultants in our consulting group, and then we also have on-demand or agile resources that are, variable. They get paid when they bill, and we cover costs when they bill. So we've got the flexibility to, manage a very open pool of talent with a little bit of cost mitigation and optimization balanced with expertise sitting in the consulting side to help drive and advise clients for transformations. Then I'll turn this over to Jen.
Thanks, Bhadresh. So let me give everyone a little bit of an overview on our financial profile and key metrics in the business. Obviously, in addition to top line, that's first and foremost, most important. But other key financial metrics in our business is our, gross margin, which is really primarily driven by our pay bill spread and also effective management of our salary consultants utilization, and then our SG&A cost structure. We have a variable cost structure. When we say that, what we mean is that, our unique agile talent model, it flexes up and down with revenue. So a significant portion of our delivery cost flexes with top line changes. What this model does is that it allows us to remain resilient in tough economic cycles and maintain our gross margin profile, which has typically been in the high 30s, close to 40%. Our agile talent base also allows us to create blended delivery teams, like Bhadresh just mentioned earlier, with both bench and with both agile and bench salary consultants on consulting projects. And what that does is it reduces the utilization risk, and it's another way that we're able to maintain our strong gross margin. On the SG&A front, we continue to optimize our fixed costs to right size to the business. We are always carefully aligning our internal resource capacities to demand, and by improving our operating efficiency, leveraging our newly implemented technology platform. We just finished a technology implementation across our North America region just most recently, and we went live with the last piece in August. Another lever that we have been pulling on and will continue to do so is pricing. Both Kate and Bhadresh mentioned that we made really good progress increasing our average bill rate in the recent years. There's still a lot of upside in that space, especially in our consulting business, as we move up the value chain to provide larger and more complex, higher value work. Against a pretty challenging macro backdrop, we are controlling the controllables. We believe all of these things that we're doing, we're building a solid foundation for the business. And when the economic environment normalizes, we should be able to reach even higher profitability. And then just a quick, I want to touch on the balance sheet. We have a pristine balance sheet. We don't have any debt, ample cash balance. We ended this quarter with almost 78 million of cash. We've historically also have thrown off a lot of cash. This robust cash flow is going to continue to allow us to be able to invest in the business, but also at the same time provide shareholder returns. Again, touching on capital allocation, right? And we take a balanced approach between growth investments and shareholder returns. Key areas of growth investments here. We want to continue to invest in our global delivery center. This one is very highly important because we serve our global clients, and it's important to have a global delivery center to compete with our competitors who typically have those as well. And then it also plays a very important role from a talent standpoint, so that we can access highly sought after talent around the globe. Another area of investment is digital and AI. We are adopting tools and technologies to use for us internally for our own productivity, but also to use in terms of delivery of solutions to our clients. And then lastly, we're going to continue to streamline and deepen our service offerings and to improve brand clarity so we can better articulate who we are, what we do best, and so our clients know when to call us. And then lastly, on the acquisition front, we are currently pursuing it opportunistically. We have engaged in a number of deals over the last 5 to 6 years. And in the near term, I would say that we are more focused on execution and integrating our recent acquisitions. And however, we're definitely looking at potential acquisition opportunities to the extent that it fits our strategy. And so before we close, I want to just go back to the why really quickly, just reiterating a few points. The professional services industry is shifting. Clients want speed, they want flexibility, they want high impact, they want outcome. RGP's business model is positioned to provide all three. And we have, going back again, I think both Kate and Bhadresh talked about this our client list, client roster, as well as our impressive client retention statistics. And we're currently, doing a lot of work to control the controllables in this environment, including significant cost takeout and combined with the pricing upside that I talked about and continuing effort to improving operating efficiency. We believe that we are poised for a very meaningful growth and profitability. So with that, I will turn it back to you, Joe.
Thanks, Jen. Thanks, team. Great, insightful presentation. Let's turn to some questions. Given the transformation you've undertaken in recent years, the business has the potential to grow significantly when the demand side of the equation begins to cooperate. Can you describe what your clients and potential clients are saying now in terms of their general appetite to move forward and spend? And has that changed over the past year?
Yeah, I think all of us in professional services, whether we're talking about professional staffing or consulting, will say it's been a choppy environment. I mean, for a lot of reasons. It's not just interest rates, it's geopolitical risk, it's what's happening in the labor market has created real uncertainty. What we're seeing, however, is that there still is demand in with respect to transformation that I would put more in the non-discretionary category. So things like core system cloud migration efforts, cost takeout or optimization activities that clients are undertaking given, tariffs, the supply chain optimization projects that are happening in our clients. And we're well suited with the kind of talent and solutions we have to be able to serve those needs. I think that everybody wants to see more transactional work because M&A activity often provides great opportunity. So we'd like to see that grow. In our largest client, we're starting to see some activity because they've done the most significant acquisition in their history. That, however, is when the timing really pulls through, will depend on when the regulators sign off from an antitrust perspective. But we're starting to see a little bit more M&A activity, which should drive growth and opportunity, Joe.
Great. Now, last night you reported some good progress in terms of improved gross margins and lower SG&A. Can you bring us up to date on cost structure enhancements? How much expense has been removed from the business in recent years? And what does this mean for profitability and cash flow potential going forward?
Yeah, Joe. Yes, we have done quite a bit to optimize our cost structure. Last year, we took action with 2 reduction in force, and as we stated yesterday, we executed another one in October. So overall, compared to last year full fiscal year, you're probably looking at about 10+ million of costs that we've taken out, especially with this last round. So we're going to continue to make progress. This is just not about reduction in force. This is just us carefully assessing all parts of the business in terms of our processes, our org structure, in order to right size it to the current size of the business, and also to make it so that it's optimized for our execution of our strategy as well. So with you mentioned gross margin too, we made really good progress there as well with the expansion of pay bill spread. And once revenue normalizes, we do feel that this business could be even in a lower revenue or demand environment, we can reach, a good profitability. And Kate mentioned yesterday in her script that we should be able to get back to double-digit profitability.
So what I got a question here from the audience, talking just to that subject about double-digit profitability, and their question is, are you specifically referring to double-digit EBITDA margins? Does your plan involve reducing cost to reach double-digit margins at current revenue levels?
Yes, it is referring to our adjusted EBITDA margin, double digit, and it's going to be a combination of expanding our gross margin and reducing our fixed costs, reducing our SG&A.
Great. Now, you also seen some nice improvement here recently in average bill rates. What is driving that, and what are your future expectations for average bill rates?
What's really driving that is our consulting segment, and it's our newest segment that's about 12 months old that we formalized, and it's allowing, given the fact that we have incumbent clients that we've been working for a long time in the professional staffing arena, it's allowing us to move up the food chain in more transformative type discussions, and those are more value-based pricing and around the value we're bringing to the project itself and the thought leadership we're bringing, and that's driving our bill rates up. We do see a lot more upside as the consulting business continues to grow and our pipeline continues to grow as well. And we convert that pipeline to realized dollars. So we see a lot of upside across all of our clients as we move up the food chain, and they're, not only serving professional staffing, but also doing consulting projects in those clients. So it's just a start. As you know, for the past 3 quarters, we've been showing meaningful bill rate increases. As the volume of consulting work increases, we'll see even higher bill rates in that segment.
Great. Now, a big part of the cost structure is variable. You've touched on a little bit here. I was wondering if you could add some more detail. How this helps the company, especially in terms of the competition?
Yeah, sure. I mean, 60+% of our cost is variable. And when I say that, that's both the cost of delivery, right? That's directly associated with revenue, but it's also some variable costs that we have even in our SG&A. Our team is overall for the company is structured with a fixed and a variable component, especially with our go-to-market team. So I think with variable costs, it helps us in the downturn, right? As revenue decreases, our cost also flexes down. And I said this, it's just to make sure I'm clear. The cost of delivery is variable because we employ or we deploy agile talent, which means that they are paid only when they are billable. Right. So the mix right now between our agile talent base and our salary talent base is about an 80-20 mix. And we expect that, as we continue to expand our consulting business, that mix will shift and evolve over time. But just the ability to be able to pull on our agile consultant base is something that makes us really unique, that I don't think that you see that in traditional consulting firms. And, so in those firms where they use fully salaried consultants, when revenue flexes down, it's much harder and it takes longer to react.
Okay, thank
Can
you
I
for
just add something, Joe? It doesn't really go to the cost model, but it goes to the client experience. When you can combine agile talent with bench or consulting talent, we really can create the delivery team that more accurately matches the client need. And what I mean by that is in more traditional fully bench model, you're often deploying who's not busy. You're not making the decision based upon what does the client really need from a skill set and technology experience or industry experience perspective. And our model runs true because we can add team members from our agile talent communities that bring exactly the skill set, the industry experience, or the technology experience that the client needs.
Great. Another one from the audience, they were wondering if you could elaborate a little bit more on your M&A activities. What are you looking for? Which expertise and geographies?
Yeah, I'll jump in and then Vidresh and Jen may have. Right now, as Jen said, we're heads down in fully integrating our most recent acquisition, which was Reference Point, that brings some great data, infrastructure, technology, and post-merger integration expertise. And we're unlocking that talent base to be available to a broader range of clients. Because when we bought Reference Point, they have been very focused really in the financial services industry. But a great story of how we're starting to unlock that is we have a top 10 client that is facing both merger integration and we call Finance 4.0, which is a big finance transformation effort at the same time that happens to be in the poultry processing industry. So very far from financial services, but the Reference Point talent team has been a great addition to building some really meaningful work in that client.
Yeah, and I
So
think we look
then,
at
sorry, to
sorry.
answer about M&A, we really don't have anything on the agenda right now, and Bhadresh is probably going to share where we'd be looking opportunistically.
Absolutely, Kate. I think as we continue to invest in our consulting segment, you know, we serve the CFO and the CFO's agenda. So acquisitions that we would be targeting are really around digital and tech, really related to the CFO's agenda. In the consulting spaces where we're focusing.
Okay, thank you for that. And let me ask you one more from the audience. It's more technical, but uh, on your prior call, you mentioned two relatively large deals were pushed out. Are those deals in the October quarter guide?
Those deals are not in the October quarter guide. They've been pushed out further. One is a federal deal that is under protest. We do feel like it will come our way, but given where the government is and their shutdown and things like that, we just do not know when that anticipated decision will be resolved. The other one, it has been awarded. We're going through contract negotiations and things like that. It is in the international realms and it is taking longer to close. So we have not guided those in the October guide.
Great. Well, Kate, Bhadresh, and Jen, we've come to the end of our allotted time. We covered a lot of ground today and got significant insight into what Resources Connection does, its markets and opportunities. We appreciate you taking the time to participate in our conference, and we wish you and the company the best in the future. Thanks again.
Thank you.
Thanks, everyone.